On today's Hot Sheet, I'm discussing the Wells Fargo revised forecast, markets where buyers and sellers have the most power, and mortgage application data for the week. Today is Wednesday, August 28th, 2024. I am Byron Lazine, and the Hot Sheet starts now. All right, a lot to get into today. We've got a Wells Fargo updated forecast that, to me, is pretty interesting. It's pretty encouraging. How does a five handle on the 30-year fixed mortgage rate by quarter two sound? I'm going to dive into that. Also, why I'm optimistic about the mortgage applications. Really excited to dive into that. But first, I just want to remind you that BAMMania.com is where you can get tickets. BAM Mania is the event of the year in October on the 17th for VIP attendees and on the 18th for general admission. VIP has 17th and 18th access. Circa Las Vegas, October 17th and 18th. BAM Mania tickets go up to next level pricing at midnight tonight. Do not miss that. BAM X members, you get 25% off of today's price. So don't wait. Lock in 25% off the lowest price before new pricing goes up tonight at midnight. BAMMania.com is where you can get your tickets. Also, later today, there will be a BAM webinar, 3 simple video techniques that you can get your leads to contact you on. You're going to walk away with those 3 strategies: the quick conversation strategy, the unghosted strategy, and the health check strategy. Eric, the broke agent, and Emma Pace will be doing that at 3 o'clock Eastern time today. So you can sign up for that free webinar later today, for 3 o'clock today. And don't forget, BAM Mania going up on prices here tonight at midnight. Lock in. BAMX members, you all get 25%. You can become a BAMX member using code HOT, of course, because you are here for the Hot Sheet. Hit the thumbs up if you get value from the Hot Sheet each and every single day. It's the only 24-hour look back that goes live on the internet in the housing industry every Monday through Thursday. All right, let's jump in, take a look now at this Wells Fargo U.S. Economic Outlook for August 2024. These are the revised projections. Thought when it comes to the 30-year fixed mortgage, Lance Lambert kind of curated this information the best. Well, it would help if I had that information up and available to you. He put together a little synopsis of pre and now. Okay, so if we look backwards, rearview mirror at what the I don't know why that's not coming on. Apologies here. If we look backwards on the last projection from Wells Fargo, we don't get to 5.9 on the 30-year fixed until quarter 4 of 2025. Okay. Quarter 4, 2025, obviously a long wait just to get to 5.9 on the 30-year fix. Here we go. Here's the tweet from Lance. But now we've get 5.9 in quarter 2 of 2025. This is a projection from Wells Fargo. Previously, we were at 6.15 for quarter 2 of 2025. Okay. Projections right now look like this: 6.1 for quarter 1 of next year. So coming into the spring selling season, lower than we've seen in recent memory. That would be the lowest level we've seen in 2 years. 6.1. 6.25 the end of this year, by the way, which is almost a quarter point lower than where we've kind of been hovering lately. Previously, they were at 6.5. 5.9 for quarter 2. Again, getting now under 6 for quarter 2. Spring selling season, this is just according to Wells Fargo. 5.85 for quarter 3 of next year and 5.8 in quarter 4 of next year. Previously, that was going to be the first quarter. Wells Fargo's projections had us under 6 at 5.9. So love what I'm seeing here from Wells Fargo. Now, you'll hear that some buyers will say, well, I'd love to wait for those rates because affordability is out of control, right? And so this might be some good data. All this data is available for you guys inside of the hot sheet show notes on BAMX, as well as all of the charts used today will be inside of BAMX as well. But this might be good data to actually share with buyers. Hey, rates, great news. Rates are going down. And then articulating the facts of what happened when rates go down. There's a lot of people sitting on the sidelines waiting for their moment of affordability to come back into the market. All projections point towards there being more sales next year, more buyer demand next year than there was this year, which means more competition for those buyers. Okay. And the other thing is, when the Fed does start to pump money into the system, what has happened to asset prices every time they do that? Assets being things like homes, they've gone up. So could there be a scenario next spring where the market is actually pushing up? We're seeing deceleration, even though yesterday we talked about Case-Shiller record home prices across the country. We are seeing deceleration in the level and the rate at which those home prices are going up. We expect to continue to see that throughout the end of this year. So while rates have lowered, they haven't gotten into the fives yet. And while inventory is going up and while prices are decelerating, even going down in some parts like Florida, now seems like buying season more if I want a deal than next spring, right? And so you could lay that story out for a buyer where they can make a decision. Do I want to wait for next spring for the competition, but the lower rates? Or do I want to be in the game now, shopping and creating an opportunity here potentially to get a better deal, creating a negotiation? Okay. Wells Fargo goes on their August forecast update shows the economic expansion that has been in place since mid 2020 will continue. That said, there is a lackluster pace of hiring in July. This is again Wells Fargo's August report, combined with the other labor market indicators continuing to weaken. This implies weaker income growth, which eventually will weigh on consumer spending. So forward-looking, consumer spending is going to take a hit with the weaker job market that we've seen. In light of these developments, they look for the FOMC to cut rates by 50 bips at its meeting on September 18th, with another 50 on November 7th. Wow. So Wells Fargo now saying they expect that the Fed by November 7th will have cut a full point. Remember CME Group, we looked at it yesterday. It's up a little bit from yesterday when I looked earlier today. The CME forecast has a 65% chance that September will only be a quarter point. Okay. 35% chance being that it will be a half a point, which Wells Fargo is saying is their expectation. Wells Fargo here clearly stating their expectation is 50 basis points September 8th and another 50 on November 7th, which would be the next meeting after. It's a full point between now and November 7th, between September 18th and November 7th. They go on to say they forecast the committee will reduce its target range for the federal fund rates to 3.25 to 3.5 by the middle of next year. That would be 2 points between now and the middle of next year. We're at 5.25 and 5.5. If Wells Fargo's projections happen to be correct, and we get to 3.25 to 3.5 by the middle of next year, okay, wrapping up spring selling season in real estate, that kind of money pumping into the system should push asset prices up just like it did last time. I mean, that's what happened last time, right? And so you can make the argument by next summer, we're actually setting new record highs on pricing. So where's the lull? The lull is now. Inventory growing, home price appreciation decelerating, election worries, November, holidays, people pause naturally. Talk about demand, mortgage applications. We're going to talk about that and this week's update here in just a little bit. This is the opportunity if this becomes, true. Hey, so what's going to happen next year to home prices? Well, to the consumers, hey, this is what Wells Fargo is saying. We know what happened last time we pumped money into the system. We don't know that this is going to happen, but this is one of the projections coming from Wells Fargo. Can point to other projections, of course. We have adjusted our consumer forecast and now look for real PCE, which is what the Fed looks at, the PCE, to slow materially at the end of the year and start next year before rebounding in the second half of the year amid less restrictive monetary policy. Another area that's going to benefit from lower interest rates is housing. Look at this. Is this to me an absolute headline to put into email or some kind of communication to your database? An area, I mean, I wouldn't, just copy and paste it here, how it's said here, but maybe we'll have something on Friday in BAMX in a box on this. Wells Fargo says housing to benefit in 2025. Okay. Another area poised to eventually benefit from lower interest rates is housing. So a buyer who's thinking, I'm going to get, some kind of, a deal. Well, housing is going to benefit through lower interest with more competition, pushing asset prices up. They've taken up their residential forecast, coinciding with recent declines in the mortgage rate and expectations for further rate softening this year. So housing to finally find its way out of the housing recession, potentially, says Wells Fargo. We now look for the monthly pace of non-farm payroll gains to average 116 over the next 12 months compared to the 209 the past 12 months of jobs continuing to softening. And so they didn't make any big changes on inflation. Inflation's still moving down, but moving down slowly. Long journey here at the end. They also, what we've talked about here are recognizing the SAM rule recession indicator. Look at this. This is looking at total unemployment July, and it now has crossed that threshold of that rapid increase on unemployment. This is one of the reasons why the Fed must react in a significant way to avoid the potential recession. All right. Wells Fargo also said at the top, we're expected to grow. So, if the Fed acts now, we could maybe potentially avoid this SAM rule recession indicator. But the alarm bells are and should be going off in Jerome Powell's ear. This one should be the biggest. Okay. Hemingway wrote about how one of his characters went broke two ways: gradually, then suddenly. This is literally in the Wells Fargo analysis here. The job market has been deteriorating all year. It's funny, though. I had somebody on a Knowledge Brokers pod comment that, we were talking about the jobs thing, the big miss last week of 800,000 plus jobs, which really is about 1.2 million when you add up all the revisions. That it was like, oh, this sounded like cable news. No, it actually was quite the opposite of cable news. It was, the fact that cable news was telling us this job market was so strong all year. And now all of a sudden we're seeing the reality. The job market has been deteriorating all year. This isn't like things that I'm making up for fun. This is the facts. Okay. And here's Wells Fargo just putting it in plain English. The job market has been deteriorating all year and has somehow all at once become more urgent. Well, it's urgent because if you let this get out of control, you will go into a recession. And then what kind of happens there? Do we put inflation on the back burner just to save jobs? That's the kind of balancing act that the Fed has to weigh. Okay. Recession risks have risen as a result of the newfound weakness in the job market, specifically the jump in unemployment rate, triggered the SAM rule threshold, which we just took a look at. There's an outsized share of new labor force entrants over the past year, which suggests the current increase may not be a surefire sign of a downturn as it has been in the past. Okay. I also saw a report that you might actually have some of these jobs that, are not being reported on just it says new labor force entrants. Okay. I also saw one on migrants getting job that aren't being reported. So there's a lot of ways that these numbers can come in a variety of different ways. All right, I guess is the best way to say it. All right, let's take a look at the just the overall U.S. forecast table chart here that Wells Fargo puts out, and just kind of forecast this thing out. Wells Fargo, they've got GDP. Look at this. They've got GDP coming in quarter three of quarter three of this year at 2.1. We had that 2.8 in quarter two. That 2.8 hasn't been revised one way or another yet. Quarter three got us coming at 2.1. Quarter four, 1.3. And then going into 25, 1.2 on GDP, 2.1, 2.83. So Wells Fargo is calling for, real GDP growth over the next year and a half. If we look at PCE, consumer price, or let's go to consumer price index, 3.6 here right now, 3.2 in quarter four, 3.2, 3.2 for the first two quarters of next year, 2.7 and 2.5 on to end out next year. So still don't have CPI at the Fed's level of 2. They don't have PCE at the Fed's level of 2 at the end of next year. They don't have inflation at the Fed's level at the end of 2025 at 2% on any metric. So that's interesting. Yet they do have, again, the Fed cutting to 3.25 to 3.5 by middle of next year. On housing starts, they have housing starts at 1.38 here they have housing starts at 1.46 here, quarter three of 2024, and really kind of in that range, 1.4 million across the board in 2025 to 1.5 million. And yeah, I just want to double check on the inflation. This is what they have for inflation in 2025. So still above the 2% level, even in quarter four here, 2.2s and 2.1s. Yeah. So forecast inflation here from Fed not coming down much there. Let's take a look at the conventional mortgage rate from Wells Fargo. What do they see here in 2025 on conventional mortgage rate? Again, that 6.1, 595, 585, 58. And remember, 2022, we had a 538. 2023, obviously 6.8. The forecast for this year is 6.6. And for the year in 25 is 5.93 when you round that out. 10-year coming in at 3.8, which is where we've been hovering right now. 3.7 the end of this year, ending next year at 3.65. So not much moving on the 10-year. Interestingly, yesterday we saw the 10-year going up, and we didn't see the 30-year fixed go up. Okay, here's the 10-year right now, still up over 3.8. And yesterday's 30-year fixed came in a tick below the day before at 6.42. So the spread is getting a little better. Okay, we didn't see much movement in that Wells Fargo forecast on the 10-year getting much better, but the spread over time here should continue to work its way back to normal. So good signs there. And all right, there you go. I thought what was most interesting from the Wells Fargo. You can grab that table. There's obviously a ton of data and forecasting in that Wells Fargo table. We'll put that as well as the hot sheet show notes for Wells Fargo inside of BAMX. BAMX members can grab that, use that in your communications with your database or your education purposes. Use code HOT to get 10% off of BAMX today. All right, let's take a look at this Realtor.com study where the recent where there are 10 easiest and hardest U.S. housing markets for home buyers. Okay, the 10 easiest markets for home buyers, they're all kind of grouped together in one location. And then the 10 hardest locations for home buyers. I mean, look at this. When we look at the 10 easiest markets, again, realtor.com study here. Realtor.com says if you want an easy market for a buyer, this is where you should be looking. Okay. It's all of Florida. Okay. And you got Lubbock, Texas. I don't even know if I said that right. Lubbock, Texas, maybe. And then you got Florida in the top 10, and that's it. You got Miami, Punta Gorda, Northport, Tampa, Crestview, Gainesville, Orlando, Lakeland, Port St. Lucie. Okay. Wow. That is all grouped into one place. That's the easiest place to be a home buyer. Okay. You've got inventory that is increasing at a sharp rate in Florida. And you've got sellers that if they want to sell, they have to be willing to negotiate. They just have so many more options for home buyers there. We put this out on nowbam.com, so you can grab it as a resource. Just go to nowbam.com, totally free there, obviously. And here's how they base their top 10 lists. Okay, year-over-year shift in median list price. We saw that Florida yesterday is one of the only locations where you're seeing some home prices actually go down. Year-over-year shift in share of listings with price reductions. Year-over-year shift in active listing count. Median days on market and active change in active listing levels. Okay. Again, here you go. Number one is the Texas location there. 253,000 is the median list price. Punta Gorda, Florida, 425,000. Median days on market, 90. Okay. That's significant. Significant growth in active listings and price reductions following the pandemic housing boom have made this market more accommodating for home buyers. Lakeland, 350, 51 days on market. Crestview, Florida, 330, 55 days on market. Tampa, 460,000, 54 days on market. Northport, 380 and 83 days on market. Miami, 650 and 66 days on market. The PSL, 445 and 60 days on market. Gainesville, 324, 325. K and 56. Orlando, 400,000 coming in at 54 days on market. Here now for the hardest markets for buyers. Erie, Pennsylvania, man, with a median list price of 198, that might be an investor special right there. 29 days on market. Syracuse, $198,000 median list price as well. Rochester, New York, 184. So when you get these lower price points, yeah, it's going to be hard. It's going to be real hard. The competition is fierce for the pricing of home. Canton, Ohio at 230, only 23 days on market. Kalamazoo, Missouri is 290. Oh, is that Kalamazoo, Michigan? That's Kalamazoo, Michigan, right? Yeah, my bad. Manchester, New Hampshire, 417,000. Norwich, Connecticut, the town that I bought my very first home in, a two-family, when I was 19 years old on Hickory Street. Do not visit Hickory Street. Just my words of wisdom there. 239,928 days on market. Okay, so there you go. There's your top 10. Rounding out there, top 10, you got York, Pennsylvania, and hardest and easiest markets for a buyer. If I'm working one of those areas, I'm definitely I'm flipping the, hey, hardest for a buyer, flipping that over to sellers, like take advantage of this peak time to take advantage. If I'm on the other side, on the buy side, and the easiest, I'm getting that out in front of all the buyers, take advantage of that moment. Home sellers right now have the most power in the Northeast. This might be a great chart from our friends over at Resi Club to share, and we'll drop this inside of BAMX to share with somebody who's thinking about selling in the Northeast. You have the most power right now. Here's a list of some uncertainties coming in the future: election, holidays, what the Fed is actually going to do, what inflation's actually going to do, what is the SAM rule, a reality? Are we going into a recession? I might list 10 different levels of uncertainty that we can't predict, but what we know right now for sure is that the Northeast have the most power for sellers. 80%. Buyers outnumber sellers 80%. Okay, buyers roughly equal sellers 13%. Sellers outnumber buyers 7%. How about Southern California? You got a seller's market there. The Midwest seller's market. Okay. Where it starts to even out is the Northwest, nationally looking even 54% and versus 22 where buyers roughly equal sellers and 24 sellers outnumber buyers. Northern Florida, Southern Florida, totally flipped. You've got sellers outnumbering buyers in both. And then you have buyers roughly equaling sellers as a huge category. Only 21% buyers outnumber sellers and 29% in Southern Florida buyers outnumber sellers. Okay. This is a survey from John Burns Real Estate, by the way, surveying resale, so existing home sale real estate agents. And we can look at the inventory trends to kind of see that. But that's a great, easy to understand chart. You want to share that with your home sellers and or buyers, depending on what of those regions you're in. Who you share that with and how you share it is going to depend on the region and the story that you're trying to tell and the education that you're trying to deliver in your market. Okay, mortgage applications. New release here today. Mortgage applications increased 0.5% from 1 week earlier. That's the top line number. Okay, the refinance index actually decreased 0.1% from the previous week, but get this, it's 85% higher than the same week a year ago. So you now have refinances happening with people that are like into 8% rates. We're seeing an opportunity here at 6.4. Hey, maybe I can go, get out of that and do a better deal for myself. What we care about is the seasonally adjusted purchase index. That tells us if demand is going up. And why I'm optimistic about this number, and is not just the 1% from 1 week earlier. It's not a huge gain, obviously. I'm not trying to overstate that, but I'm optimistic about it because of the time of year. Now, this is the time of year you see a decline on purchase index. We saw a decline on the 30-year, so that does bring more interest into it. We usually have a time of year where it's back to school, it's end of August vacations. You got a lot of stuff going on, a lot of distractions, and to go and apply for that mortgage is a meaningful step in a end of the month, end of August, that just brings a ton of distractions and all kinds of life events. If we can continue to see a 30-year hang at this level or get below, I could expect that when you get in the second week of September, you see another pop on purchase index, because to see it now, to me, is optimistic. Okay. Again, that's still 9% lower than the same week a year ago. So I don't want to overstate things. We still are experiencing much lower demand than we did last year, and certainly than we did in 22, and certainly than we did in 23. It drops every single year significantly. 9% when you look same week 1 year ago. Okay. There is your mortgage application update. Again, we took a look at 10-year, really unchanged here. Even from yesterday, 3.8 is the number. We've kind of hovering here for a minute. Under 6.5 on the 30-year fix, 6.42 remaining there. And that's your hot sheet here for this week. Again, reminder, we have the webinar today at 3 o'clock Eastern time. The broke agent, Eric Simon, as well as Emma Pace, talking about 3 videos that you can walk away with and implement into your business today to get your database to start talking to you. That'll be at 3 o'clock, completely free webinar. And BAM Mania pricing goes up to next level pricing here tonight at midnight. Do not miss that. BAMX members, you get 25% off your ticket price. Join us in Vegas in October. BAMmania.com to lock in. All right, there's your hot sheet. I'll see you back here tomorrow morning. Until then, toodaloo.